Is it right? How we have to track down the receivables as well. What we have learned? We have learned that receivables may be material. It is, see, material, it values, okay? Material means it values. It is usually audited test of details, not test of controls. Is that? Not substantive procedures also. Test in detail means you will go to the lowest level as much as possible. Sales can be tested at the same time. Whenever you are talking about the receivables, make it sure that you have to do the sales also. Existence, completion and valuation. Is that? And occurrence, completeness and accuracy. There are two different factors. Is that? One we are talking in terms of what? One in terms of receivables. One we are talking in terms of sales. Is right? Two different things are there. And when you are talking about two different things, simultaneously we have to match. Okay, we have to match it. What it says, there are three different objectives. Is right? One first objective is the classes of transaction, whether we have recorded it perfectly or not. Second one, we are talking about the cutoff. Is it right? We are talking in terms of the period end. At the end of the period, we have to make sure on 30th, 30th, at every month, as we are getting a bank statement at the end of the month through email, is that? Understand the process, understand the procedure. As we are getting the bank statement at the end of the every month, is it right? Likewise, you have to get the receivables as well as you have to send the payables. Simultaneously it will work. Fine. And how it has to be presented in the bank. Now, what is the substantive procedures? Completeness. Is that? This is very, very interesting, very simple also. Is it right? Now, how we have to work it out? See, we have to work it. See, it is like this. Is it? It is like this. We have to work it out from the bottom till the top. Is it right? Means individually we have to take. Is it right? Individually we have to take. By the time you reach this stage, is it? It will reach this stage, statement of financial position. Is it? Statement of financial position. You will have the current assets. In the current assets, you will see what? You will see receivables. First, you will do individually. Is it right? First, you will do individually. One by one. You will pile up the things. You will add up the things. Is it right? Automatically, what will happen? This will have the gross amount. Is it right? Gross amount. This is what it says. Agree the balances of individual sales ledger accounts. Is that? Individual sales ledger account. To the what? To the aged receivables. Is it right? See what happens. You have X, Y, Z. Is it right? X, Y, Z. Now, assume it is going to be how many days? Maximum 90 days receivables. Credit sales will be not more than 90 days. Now, what happened? X is having 20,000. Y is having 25,000. Z is having how much? Assume Z is having 60,000. Now, what happening? He is not only having 60,000. Is that he is paying on 90 days. Fine, no problem. Nothing will happen. But one of the customers, is it right? He has not paid for almost 180 days. Is it 180 days? Listen carefully, understand the point. It's very easy. If your number of days are increasing, this customer is classified under the classification of what? Aged receivables. Is that? This is a aged receivables. It means he is not paid over a period of time. Is it right? Long period of time. Simple. Is it right? Old age person. As simple as that. Okay? Fine. If I don't tell like this, you will not understand. Okay? So don't. And vice versa. Is it right? Vice versa means you see the small amounts. Is that who are paying quickly, who are paying delayed. Is it right? Who are paying quickly. These are the people who are delaying the payments. Is it right? These are the people who are quick. Vice versa means they are paying quickly. Classify, because why we are doing this? In future, we will not sell the goods to those people who are delaying the payments. As simple as that. That is the message. Okay. Match the total. This is what we are doing. Is it right? Aged receivables to the sales ledger account. Definitely, what we are doing? We are doing this what? We are only doing this for the accuracy. Definitely, what we are doing? Whether 25,000. What we are doing here? We will take all these totals. Is it right? 60 plus 20, 80, 80 plus 25, 185, 105,000. Is it right? What we will match whether 25,000 is included in that 105 or not. Is it right? That is the second point. Cast means again totaling. Cross cast. Aged. We are working out what we are focusing on which type of people? The people who are delaying the payments. Got my point? We are delaying the payment. That is where the receivables find. Receivables are not focusing on the people who are paying on time. The receivables are the ones where we have people are delaying. Is it right? Cross check whether 25,000 is 25,000. You have to focus only on this 25,000 because 25,000 these people are delayed by how much? 180 days. Is it? Now, when you do the thing, trace a sample of shipping documentation. Is it right? To the sales invoice. Means you say when we have send the documents. Is it right? When we have dated the invoice. Is it right? In general. Is it right? It is not for the aged receivables. This is in general. Is it right? In general. What we have to do? We have to say that, see, when we have shipped it, when we have invoiced it into sales and receivables, because the most important thing is the credit period is going to be how much? The credit period is 90 days. It's not we are assuming, it is the standard one. Complete the disclosure checklist. Is it? Complete the disclosure means you have to take into consideration that who are the aged receivables. Is it right? When we have shipped it. Is it right? When we have raised the invoice. Is it right? When we have delivered it. Is it right? Everything we have to make completeness. Is that? We have to make it a completeness. Is that? Receivables makes that difference. Is that? Continuation to that. Is that? Continuation to that. What it says, compare the gross profit percentage by product line. Yeah, this is what always we are doing. Is it right? We are always what we'll do in the completeness. It is an analytical procedure. Is it right? It is an analytical procedure. Comparing with the previous year. Is it right? This is the simplest way of writing the one of the points. Is it right? Compare the level of prepayments. How much? See, again, what you are doing? Assume you are talking about 2020. You are talking about 2021. Is it right? How many people have prepayments? Is it right? That how many people have paid in advance? How many people have paid before time? Is it right? Whether we are the most important thing is whether the collection is done or not. Is that the collection is that's why receivables. You see the things. You see the things in most of the cases. Is that when you is it right? Most of the time you see the things. Banks, is it right? What happens in the banks? Banks will give loans. Is it right? Banks will give loans. People are there to recover the loans. Is it right? The people are there who that is the reason. Sales is done. Recovery is very important. Is it right? Compare the level of prepayments with the previous year to ensure that materiality, the amount is correct, the amount is complete. Okay? Materiality is nothing but the value. That's very important. Total value. Is that you can understand in any terms as that. Last, what it's a review detailed statement. Is that? See what happens? See the thing. Paid in advance. Is it right? Paid in advance. Paid in advance. Is that? Now I'm testing your accounting. It will be current assets or it will be a current liabilities. Tell me very fast. You have paid in advance. You have received in advance. Is that what paid in advance will be what? If you are paying in advance, for you it will be what? It will be current assets or current liabilities?
Liabilities.
Pardon?
Current liability. Paid.
Paid in advance. You paid in advance.
Okay.
You paid in advance. It will be a current asset or current liability? Open up. Tell me right or wrong. Nothing will happen.
Liability. Current liability.
Yes. Paid in advance. You have paid in advance. It is a current asset. You received in advance. It is a current liability. You have received before the time. Is it right? December month is there. You received in the November. December it will be revenue for you, but in the November it is a liability for you. Anything received in advance is a liability. Anything you have paid in advance, it is an asset for you. Okay? Received means in advance. Next month income you have received now. Next month it is a revenue. Okay? But this month what you will do? What we have to see the thing. Rent will be there. Is it right? Financial accounting very strong. Very strong. Rent. Is it right? You will say that rent paid. Okay? Rent paid. How much? 2,500. Is it right? Now, what you will do? You will add outstanding. You will add outstanding. Means it has not paid. Fine. Now, think in terms of rent received. Is it right? Rent received is how much? 1,500 minus. Is that minus what you will do? You will say that rent received in advance. Rent in advance. For next month, what you will do? You deduct 100 reals. Is it right? This 100 reals, what you will do? You have received in advance. Is it right? This 100 reals will be identified as what? Will be identified as a current liability. Is that will be identified as a current liability. That is the most important thing. Review detailed statements of financial position to ensure that that all payments has been included. Prepayments. Is it right? Means you should make it a very clear classification whether you have received in advance or you have paid in advance. Sales, basically you are going to receive. Is it right? Sales means you are going to receive. Whether it is for the current month, whether it is for the next month. Some people will say that yes, we have taken it for how many days? 90 days credit. Okay. When we say it is 90 days, some people will pay within 45 days. Is that some people what will they is it right? If the invoice is 1,000, it will be delivered in the month of January. You will pay advance. Is it right? You will pay advance of how much? 200 reals. Then 200 reals is going to be treated as a current liability. In January, this is going to be treated as a revenue. In November, it has to be treated as a current liability. Is it? That much precision has to be there. Is it? Now, coming to the next one, existence. When will the existence will be there? When we are going to say perform receivables confirmation. See the thing. You are receiving. Is it right? For you it is receivables. For others it is a payables. What is we have discussed is there should be a return confirmation. Is it? Now assume somebody will send you the client will send you the payables. For you it is a receivables. Sometimes you will not reply. If you are not replying, it means that things are confirmed. Is it right? What it says that performs a confirmation. Confirmation is very, very specific. Put this as point number 1. Put this as a star. Is it? Now, for a sample of year-end table, follow up all the, if there is any disagreements, if there are any replies, is it non-replies, is right? If there is any disagreements, you have to what? You have to follow it up to get the receivables confirmation. Easy. They understand the point. Understand the concept. Very simple. Receivables means you should be in a totally different frame of mind. You have to think only from receivables. You have to think only from inventory. You have to think only from the non-current assets. That's very, very specific when you are talking. Means you have to, if there is any disagreements with the client, definitely you have to follow it up, and you have to, any non-replies, you have to follow it. What it says, perform alternative procedures. Is that means you should not just keep it quiet. Sometimes what will happen, the client will not reply. Is that? They will not reply. Then what we do, what you have to do on your own, review after date cash receipts. Is that whether we have received anything after the date? Is it right? After 90 days we have received. Sometimes it happened in delay. Collection will be delayed. Clearance will be delayed. Is it right? By inspecting what? By inspecting which statements? Bank statements and cashes. Examine the customer's account. Go to see. First you have to take bank. Is it right? First you have to take bank and cash. Then you have to take what? Customer's account. Is it right? Any correspondence is there with the customers. Is it? For the whether the balance is outstanding or not. That's very simple. Is it right? If second stage what? Take the customer's account. What any correspondence is there with the customers about the balance outstanding, and if there is anything with respect to, sometimes what will happen, specific invoices. See, we have done somewhere, if you remember, is that whenever we are going to deliver, or whenever we are going to be delivered, or whenever we are going to see what we are doing, we are doing two types of check verification: quantity as well as quality. If quantity and quality is not matching, definitely client will not pay. Is it right? If there are any disagreements. So that is the reason whenever we receive the goods, whenever we deliver the goods, the most important thing is you have to get it confirmation that the goods has been received, this much quantity received, and this is in the good condition. Then only it will lead to payments. If there is any disagreement at that stage, the payments will not be done. Is that? This is one of the procedures we are going. Examine the underlying documentation, purchase order, dispatch documents, duplicate sales invoices. Is that you should not keep, we should not say that we are stopping here. You examine, is it right? Examine the documentation, examine the dispatch, whether it has been delivered or not. Is it right? You have duplicate invoices. One is customer's copy, one is accounts copy, one is sales department copy, one is office copy. Likewise, you will have different. What you will do, whenever you are sending mail, you will say CC. Is it right? Whatever here, now I am talking about the current situation. Is it right? You will say so many. You will carbon copies. You will see all the things that we have sent it. We have updated the relevant things are there. Is there any duplicate sales invoices there? We have raised it for the second time. Automatically, what will happen? We have to think over it as such. Isn't it? This is the way we are very much. Is it? After that, we have to make it sure. Fine. What is there? It says that. Is it a continuation to that? Substantive procedures to existence. Inquiring from the management explanation for invoices remaining unpaid. If there are any unpaid invoices, is it right? If there are any sales invoices which has not been paid, is it right? Which has not been received. Definitely, if any disagreement, is it right? Any disagreement, any correspondence is there with the client, any disagreement, you have to discuss The last stage, is it at first? See, this is the way you have to present. First, you have to do the total casting should be done. Then you should see what is the sales invoices and how it has been delivered, shipping documents. Then you have to get the confirmations. Is it right? The last stage is then you have to discuss with the management. This is very, very simple. You have to inquire with the management. Any subsequent any invoices has been unpaid, or after subsequent ones has been paid. Is there any invoices you got it out of the box asset? Observing whether the balance on the account is growing, and if so, find what is the discussion. See what happens. See, sales is very, very sensitive. Is it right? Sales is very, very sensitive. You are selling the sales and receivables are there. Is it right? You have to make sure that it has to done with 90 days. Okay. Now what happens? The amount is increasing. Is it? The amount is increasing. The amount is increasing. Is it? And recovery is delayed. Is it right? Recovery is delayed. Delayed. I am not talking about it has not been given. Delayed. It is a cause of concern. Is it? That is the reason. Is it? What we'll do? See the thing. Whenever you write receivables in the balance sheet, what we'll do? We'll say what is the provision for doubt, bad and doubtful debts. Is it? For bad and doubtful debts as such. Is it? This is what we have to make sure. If there is any balances, this what they are saying. This we are talking in terms of what? This we are talking in terms of aged receivables. See, you are also assume you are doing the business. Fine, you are doing the business. What happens? You say that yes, I have given it for 90 days. They are not paying after 90 days, 120 days, 150 days, 180 days. Definitely, it will be a cause of concern for you that yes, the number of days are increasing. We are not getting recovery. Is that we have to take some measures to get it done with respect to recovery. That is the reason whenever we talk about receivables, what is the one thing that always prop up is they will give you an example of aged receivables. Fine. Rights and obligations. Is it right? Now, what are the rights and obligations? Now, how it will work? Is it right? See, people are there, companies are there. Is it? You have the inventory. Is it right? You have the inventory. On the inventory, they will take what? They will take working capital loan. Understand the process. Is that working capital loan? Fine. This working capital loan will be now on this inventory will be sold. Is it right? This inventory will be sold and it is a receivables. This receivables you will get cash. A part of cash you will retain. Is it right? And a part of cash, is it right? A part of cash what you will do? You will repay. Is that a part? Now, when you have the rights and obligations, is it right? You have the rights and obligation. You have to get the bank and inspect. Is it right? Inspect means you have to oversee this. Inspect a bank confirmation letter. Any liens is nothing but any claims are there. Is it right? Any claims are there on receivables. By whom? By the bank. You understanding my point? I will say, is it right? I will say that yes, I will have the inventory. On this inventory in future, I will sell this inventory. Now I want working capital loan. Bank will say, fine, okay, we'll give you working capital loan. But only one condition is there. The moment you get the recovery, when you sell it and you get the amount, first it is like a salary and you are taking a loan. Very simple. Don't worry about that. It is like a salary. You will take the loan. Is it right? The moment salary is deposited, what will happen? Immediately bank will deduct the loan amount. Is it right? It is also the same thing. Sales will be there. You are taking loan on the sales. The moment you are recovering the sales, automatically the bank will take the loan. That is the reason. What we'll do, we will ask for no objection, no clearance certificate from the bank. Is it right? When the clearance certificate from the bank is there, bank will see whether you are having any loans or not. In the same way, auditor has to get the confirmation from the bank that there is no lien on receivable. Inquire with the management to understand whether receivables have been sold. Is it right? You should make sure that yes, it has been sold, complete sale. Is it right? It is like a complete sale. Is it right? You should not say that it should be a part sale. Is it right? You should not have any terms and conditions. Is it right? You should not have any terms and conditions attached to the sale. When you are talking of the sales, it should be what? It should be a complete sales. Inspect any loan agreements or board meetings. Is it that we have of any evidence receivables being sold? Inspect, right? Is it? Inspect agreements and see, it's if you are saying it's a big sale, big contract. Is it right? Sale. Definitely, what will happen? The agreements will not be done at the lower level. Is it right? The agreements will be done at the top level. Is that we are making a point? Is that we are making a point that we will sell it for next 5 years? Is that we are selling it for the next 5 years, and we are selling a huge quantity. Is it right? Now, if you are having this type of agreement with the client, this type of agreement with the client should be have a approval by whom? Approval by the board. Is it? Means any long-term contracts, any long-term sales contract. Is it right? A huge amount. Is it right? Then it will be, you should have a clear-cut terms and conditions that has been approved by the board, and it should be in the where you have to refer the minutes. Now, what is that? Now, another thing, there is something called as pledge. Is it? There is something very it's same. Is it a pledge? What is the pledge? Pledge is nothing but, any idea about this? Yes or no? Tell me very quickly. Pledge is nothing but you have assets. Is it right? I can say, yeah, fine. You have assets. Assume you have assets of a property, plant and equipment. You have assets of 100,000. Is it right? You are taking the loan against the assets. Is it? You will say that you will take a loan. Is it? Assume you are taking a loan of how much? 60,000. This loan is against your own assets. Is it right? 60,000 is against whom? Against your own assets. This type of loans, pledge, is given to those type of customers who are having high risk customers. Is it high risk? High risk customers, bank will not involve in sales. You say that yes. I am taking example of myself. I am having my car. Is it right? Having my car. What I will do? I will go to the little more than stringent than mortgage. Okay. At least mortgage will have some softness is there. Very simple. Mortgage is some softness. Here pledge means if you are not paying on time, got my point? If assume pledge is like this, if you say that we are paying by 90 days, if you don't pay by 90 days, done, the asset will not be yours. Mortgage, at least you have that flexibility, you can reschedule that mortgage. Is it right? You can reschedule the mortgage. Pledge is tougher than mortgage. Is it right? See, in extreme cases, is that in extreme cases, people will do this. Companies will do this. There is no other option for them. Is that they will pledge the receivables. They pledge the assets against the receivables. Assume if 90 days you are not getting amount within 90 days, automatically what will happen? You are losing 100,000 reals assets. Is it right? That is what it says. Through discussion with the management, whether any receivables has been pledged, assigned or discounted, whether such items require disclosure in the financial statement. If anything is there like this, definitely what happened? It is a high risk yen transactions. Fine. Then this type of transaction should have a disclosure. Is that junk? We use the word junk. Is that when we use the word junk, we use the word junk at the last stage. Is that junk? Junk bonds. Is it right? Is last stage high risk bonds. Fine. This is where we have to work it out with the receivables. Fine. Next. That's next one. What is the valuation and allocation? Compare receivables turnover and receivables days previous year. Is it right? What happens? See, we have done in somewhere in some of the cases, in one of the one or two questions we have done. Is it right? To increase sales. Is it right? To increase sales, what they have said? They offer discounts. Is it right? They offer discounts. Is it? To increase sales, is it right? What they have done? They have sold to everyone. Is it right? Unapproved list also. Is that unapproved list also? To increase the sales, they have not taken into consideration the credit history of the sales of the clients. Is it right? This will lead to what? This will lead to receivables turnover. Receivables turnover or receivable days should be less, 90 days. Is it? 90 days as such. Is it? Now, if receivables turnover is increasing, assume it increasing to 126 days. Previously, we are recovering within how many days? 90 days. Now, you are recovering with how many days? 120 days, 126 days. Means it is not a good sign. Is that you have to compare. Last year, that is the purpose of calculating receivables turnover. Is it right? In financial accounting, when you are calculating receivables turnover, this is the main purpose. The purpose is within how many days we are recovering. We are comparing. What happens last year and what happens 2020 and 2021. This will give you an indication that whether we are recovering. Assume if the receivable working days last year is 90 days. This year the receivable number of receivables is 61 days. Means it's good. It's a good sign that we are recovering our cash within a quick number of days. Compare aged receivables of the current year with the last year. Is it right? How many aged receivables are there? What is the amount? Is it right? What is the amount of last year aged receivables is there 2021, 2020, 2020 and 2021. Okay. I am not writing the year. Last year aged receivables are 25,000. This year aged receivables are 29,000. Is it right? Aged receivables. This is a cause of concern. Is it right? This is a cause of concern. Don't put the numbers in the examination. Just write. Compare receivables turnover and receivable days with the previous year. We are not only doing with the previous year, we are also comparing what with respect to the industry data. Is right? Means you are when we are talking about the industry data, we are talking about whom? We are talking in terms of competitors. Review the adequacy of allowances. That's very important. Is it right? See what happens when you do the aspect like this. Is it right? Is it? See like this. 2020, 2021. Is it right? 2020, 2021. You have the receivables. Is it right? You have the receivables. Receivables is how much? Assume. Okay. Assume receivables are 100, take percentage, is that 100? Now you are making a provision, is that provision for bad and doubtful debts, is that provision? Last year you have done provision of how much? 2%, very high, don't okay. Now this year you have done a provision of how much? Only 1%. Provision is nothing but estimated losses. It's a good sign, is it right? It's a good sign that yes, provision it decreases, it means losses are decreasing. Assume what is the alternative, is it right? You have last year provision, how much is the provision? 2%. This year provision is how much? 3%. Automatically what will happen? Means you are selling to customers who have selling to customers with bad, I'm using the word with bad credit history. Either you are selling to customers with a bad. When you sell to the customers who are having bad credit history, definitely what will happen? The recovery time will be more. Okay, the recovery time will be more. The number of days will increase. The provisions will increase. Is it right? The provisions will increase. The aged receivables will increase. All the things will have repercussions. Is that we are not talking anything with respect to positivity. Keep it in mind. We are only talking about which receivables we are going to, how we are going to recover the receivables which are not collected during the process with respect to sales. Compare irrecoverable receivables expense percentage of the sales. How much we have last year? How much is not recovered? Is that how much? Is that sales? Is that sales? What we are doing? 2020, 2021. Is it right? 2020 and 2021. We say that sales will be how much? Sales will be 10,000. Here the sales is how much? Sales is going to be 15,000. Fine. Now, what is bad? As simple as that. There is no provision. Bad. Last year we have not recovered 400. This year you have not recovered 750. Then we have to know the percentage. 400 divided by 10,000. It comes to almost 0.04. Is it right? 0.04. We'll say 750 divided by 15,000. It comes to almost 0.05. Check the calculation. 400 divided by 10,000. 0.04. Fine. 750 divided by 15,000. Yes, 0.05. Is it right? When we do this process, we will see how the things are working and whether the irrecoverable receivables expense as a percentage of sales. Is it this much you are talking about the receivables? Is that the moment receivables will come, you have to make sure that it has to be reflected. Compare the allowances for uncollectible receivables. Now you can understand what I am saying. Is that you can understand? It's not difficult at all now. Is that it takes time, little bit time initially. Is that it takes a little bit time. What it says, compare the allowances. What we are doing, we are not talking about the bad, is it right? We say that what is the sales and what is the provision. Is that we are saying that provision is increasing from 3% to 5%. Definitely it means you are estimating that there will be high number of losses. Is that there will be high number of losses compared to the current year with the previous year. Not only with that, we have to compare with the industry. Confirm adequacy of allowances by reviewing correspondence. We have to confirm whether provision is adequate. Provision is sufficient. Is it right? Provision is sufficient or not. Very important. Is it right? Otherwise, we have to revise the provision. Examine credit notes issued. What is the credit note after the year end? For allowances that should be made against the current period. We are using the credit, means we are whether we are giving any credit advantage to the customers. Is it right? Definitely. What will happen if anything is there? We will for those customers who are highly rated customers. Is it right? We will give them credit notes. That's where we have to see whether we have given any credit notes after the end of the year. Because see, we are working for December 31st. Is it right? See, till 30th April, the things will work. Is it right? If we have issued on 5th of January, we have to make 5th of January related to December. Is it right? If it is related to December, then it has to be in the month of December rather than in the month of January. Is it? Against the current period balances. Is it? Against the current period balance. If it is related to December, focus on December. It should be in December. It should not be in the month of January. Otherwise, what will happen? Definitely, the effective date starts from 5th January rather than December. Examine large customer accounts individually. Very, very, very important. If you have gone through BPP examination question bank, there is given a question on this. Is that? Examine large customer accounts individually and compare. See, you have to focus. Is it right? You have to focus on the. If you are having, see the thing, A, B, C, D, E. Is that one customer is having 10,000? Is that another customer is 21,000? Another customer 36,000? Another customer 95,000? Is that another customer 71,000? Is that now what is happening? See, the customer who is having 95,000 is very sensitive. Even he is paying on time. Very sensitive, because 95,000 is the material. It is 95,000 is the material. It makes the difference. The customer who is paying 75. I am not saying that 10,000 is not important. Is that 10,000 is not important, but the risk involved with 95,000 is comparatively high when you compare with the risk involved with the 10,000. Is it? That is the reason. If you are having a large customer accounts. Is that if you are having the large customers accounts. Fine. This is where we are talking in terms of valuation and allocation. Is that for a sample of old debts. Is that for a sample of old debts, non-recoverable, aged. Is it right? Obtain further information. See, we should not lose. As simple as that. I will tell you very clearly. You are doing the business. Is it right? You are doing the business. Think like that. You are doing the business and you have a credit. You have given a credit sales of to A. Is it right? He is not giving. He has to give 90 days. Is that? Is that? He assume. He gave you 8,000. Is it right? And the balance is how much? Balance is 2,000 riyals. Just tell me, think over it, whether you will keep quiet if he is not giving 2,000 riyals. Is that? Whether we will keep quiet? No. We will follow it up again and again. We will never lose hope. We will never give up. Is that? We follow it up again and again. 1 month, 2 months, 3 months. Fine. 4th month, 5th month. We want to get that money back as much as possible. Is it right? That is where the receivable matters. You are doing the business. Think over it. You will never give up an amount which you have to receive it and customer is delaying. Is it right? For example, see now it's a crime if a check is bounced. Okay? If the check is bounced, it's a crime. That much severity is there. For a sample of old debts on the aged trial balance, obtain further information regarding their recoverability by discussion with the management and any customer correspondence. Sometimes for a sample of prepayments, is that it happens in both the cases, if whether it is delayed or it is prepayment. If it has been prepaid, paid in advance, paid before time, is it right? Way before time. What you have to do? Prepare the listing, is that? Prepare the listing, recalculate. Recalculate that it has been done accurately or not. Is that? It's not like that we are talking only about the people who are delaying. Is that? Delaying is also a challenge. If you are receiving in advance is also a challenge. If you receive in advance, again you have to do reconciliation. In both the cases, is it right? In both the cases, what is more important? Reconciliation is more important. Reconciliation is more important, and another thing is there is a confirmation is also more important. Is it right? This is the third one. Okay, this is the third one. Classification and understandability. Review the aged receivables. Is it right? Review the aged. See, don't get confused that we are getting aged receivables again and again. Is it? Here what we are doing? We are reviewing the receivables. Is there any large amounts? Is it right? Any non-amount that are not non-trade receivables. Is it? It's not only that we are talking about the sales. Maybe other receivables will be there. Okay. Long-term receivables. Consider whether such items require a separate disclosure. Special cases. Is it right? Special cases. Now you understand the thing? Is any special cases are there? Is it right? If any special cases, any isolated, is it right? Any isolated clients are there, you have to make sure. Is it right? See, there should, see, when you are dealing with the sales, definitely you will give different treatment to different customers based on their credit history. Which one? Prepayment?
Previous slide.
This one?
Yes, examine credit notes.
Credit notes. See, sales will be there. Is it right? Assume you have purchased. Okay, you purchased and some you have purchased from take home center. Okay, you have purchased furniture from the home center. Now what happens? Is it right? What happens after 3 days? Is it right? You will return. After 3 days you will return. Assume you have taken it when you have taken it on 30th December. Is it? You have taken it on when? You have taken it on 30th December. You have returned it 30th, 31st, 1st. Is it right? You have returned it on 1st of January. Is that fine? They will not, there is some damage is there, there is some issue is there, you will return. Okay, they say that within 7 days you can exchange it. You can exchange it. Is it right? They will not give you cash. What happens immediately when they are giving, when you are exchanging the goods, you can exchange it on the same time. Otherwise, they will give you what? They will give a credit note worth of how much? 10,000. They will say that yes, worth of 10,000 riyals, and say that you can exchange, you can buy it. Is it right? You can buy it any time next 7 days. Is it right? Next 7 days. Fine. Dates are important. Dates are very important. When you have bought the goods, you have bought the goods on 30th of December. Is that you have paid when you have paid on 30th of December. The transaction will be recorded as 30th of December. Fine. You are returning when you are returning the goods on 1st of January. They are issuing the credit note on 1st of January. And this credit note is valid till, assume that this credit note is valid till 8th of January. Fine. Now, understand, see the thing, complication. The cash has been received. Is that the cash transaction done on 30th of December. But subsequently, there will be a returns, there will be exchange, there will be, all the things will happen on 8th of January. In this case, what happens? The firm will issue credit notes. Is that the firm will, company will, Home Center will issue one invoice. Is it right? Home Center will issue one 10,000 invoice saying that you can, if you want, you can buy today, or if you want this invoice, the purchase invoice credit note will be valid for the next 7 days. Within the next 7 days, you can buy. In future, if you come across any, future it happens 100%. Any place, whenever you are doing this, even it happens like this. Whenever they will issue a one slip, you see at the top of the slip, they mention very clearly it is a credit note. It is a credit note. Is it credit note? Now what happens? Examine credit notes issued after the year end. When they are issuing the thing, they are issuing on 1st January for allowances that should be made against which one? Current period. Is it? They are issuing after the year end, after the month end, fine. But it is related to what? It is related. This means now you can understand. This is pertaining to what? This current period is what? Current period is 30th of December. When they are issuing it on 1st of January. They are issuing on 1st of January. Is it right? After the year end they are issuing, but it is related to what? It is credit note, as simple as that. Means that is a valid transaction amount that can be claimed by the customer within the time frame. Is it clear?
Yes, clear.
Mr.
Yes, tell me.
Can you repeat also the first point?
Which one? Compare the allowances for uncollectible accounts as percentage of receivables. Is it right? See the thing. Allowances is nothing but provision. Is it? Allowance is nothing but provision. As simple as that. I will write with red. Okay, 1 minute. Is it? Allowances is nothing but a provision. Is it right? Now, I have written here. Is it? What we say? We'll see. Last year how much provision is there? 3%. This year how much provision is there? 5%. Provision is estimating for your losses. Is it right? Provision is nothing but what? You are estimate for expected losses. Allowance is nothing but provision for estimated expected losses. Last year how much you have maintained? You have maintained 3%. This year how much is the loss estimation? Estimation is 5%. This is right. Now we will say, we will compare, because the estimations has been increased, there will be some materiality will be there. Again, I am telling you in advance, we will cover this at a later stage. Again, there is a concept called as a going concern. Is that means your bad debts are increasing. Your bad debts are increasing. it is allowances are increasing, provisions are increasing, it is not a good sign. Is it? Uncollectible amount has been increasing, it's not a good sign. Last year uncollectible amount is 3%. It should be decreased. Instead, it should not increase. Is it okay?
Yes, clear.
Fine. Is it? Now, what it says, classification. Read the disclosure notes. See, as simple as that. People are, see, as an auditor, see, when you are doing your bachelor's, that's a different case. Understand the point? There's a different story as such. But as an auditor, you have to make sure that you have to read notes to the accounts. Is it? You have to go to the notes to the account. That's very important. In the notes to the account, there is a lot of disclosure will be there. Whatever we are doing, is it right? Whatever we are doing here, we are doing during the audit procedures. Is it right? During the audit procedures. When you are doing the audit procedures, substantive procedures we are making it a point that we are not finalizing the financial statement. In all the cases, what we are doing, we are using the word very clearly. You have to mention this. You should never mention financial statement. You have to mention, whenever you are doing substantive procedures, you have to mention draft financial statements. Marks will be given on this word only. I'm just reminding you. Is it? Draft the, see, while writing, we don't have that practice to write draft financial statement. We'll say financial statements. There is a huge technical difference between a draft financial statement and a financial statement. Fine. Is it clear about this till now? You should not give up. I'm very a little bit concerned about that. Is it right? Please don't give up now. Put the efforts, carry on the efforts. That's very, very important. Last moment, don't give up. Most of the students will do that. You should not do this much effort. You have put almost 2 months effort. Is that? And again, trust me, this much effort we cannot put second time. So this time, inshallah, whatever the effort you are putting, inshallah, convert this effort into success. I am very much concerned about that. Okay, inshallah khair. Now, what is the cutoff? As simple as that. Cutoff is nothing but we are talking about what? We are talking in terms of the date. Is it right? 31st December. See, what happens before 31st December and what is there after 1st December, 1st January should be very clear. You should not mix up 31st to 1st and 1st to 31st. Is it right? What you have to do, we have to, for a sample of invoices, very easy points. Very easy points. Is it right? Cutoff is a very easy way of scoring the marks. For the sample of invoices around the year end, inspect the dates and compare with the dates of dispatch and the dates of recording. Is a date of dispatch and date of recording. Means, see, we have recorded. Is it a first you will record, you will raise the invoice, then you will dispatch. Is it right? You should make sure that when we are recording, when we are dispatching, is it? Dispatching is secondary thing. Recording is when you receive the amount. That's very important. Is it right? You are going and ordering your furniture today. is it, at home center and saying that we will receive, you will pay the amount, is it right? But you will receive after 3 days. That's a different case. When you are paying, that is very important. Cut off, is it right? When it has been recorded, when it has been dispatched. For the sales, it is not only for the sales, is it right? Sales returns. We told beginning, whenever we are talking about the receivables, sales will go together. Is it? Sales to receivables and receivables to sales. For any sales returns, is it? Select a sample of returns documentation year end and trace out to related. See, again what they are talking about, credit entries. Credit entries is nothing but credit notes. Is that credit entry is nothing but credit notes as such? Is it right? You should make sure that yes, there are sales returns are there. Is that for sales returns? Is it right? For sales returns, we have issued what? We have issued the credit notes. Simple words, credit invoice. Okay. Perform analytical procedure. What are the sales returns? Is that comparing the ratio of sales to sales returns? Is that means, see, getting sales return is also not healthy. Getting my point? You should not get returns. Is that sales returns should not be there. Otherwise, what will happen? Say if you are getting, if you are the activity will increase. Is it right? Unnecessary. What will happen? The accuracy will get complicated. Is it right? You should know what is the percentage of sales. Is that percentage of sales returns to sales? Is it right? Percentage of sales returns to sales. The percentage of sales return to sales, percentage of sales per sales return to sales. Is it right? Return to sales amount. Is it right? Amount should be less. Is it right? Should be less. Review materials after date invoices. Review material after date invoices. Is that means what is the inventory asset? What you have to do? You have to review what? Credit notes. What we have issued. We have to know what is the adjustments we have made, and it has been done in the most, what we are saying, cutoff says it has to be correctly in the relevant financial period. Is that means any invoices we have done after date, is it right? It should be, whether it should be in the month of December or is in the month of January. If it is related to the month of December, you have to trace it out. Is it right? That yes, this is happened in the month of December. This is happened in the month of January. That is the one of the conditions of cutoff. What it says, accuracy. Is it right? See, understand this. The moment we do question paper questions, it will be reflected there precisely. Okay, precisely it will be there on that. Is that what we are doing about accuracy? For a sample on invoices, compare the prices and terms of authorized price list. Is that you have done fine. You are talking about barcode reader, all those things. But what we are doing, we are comparing the prices. At what price we have, is that what is the, at what price there is a sales invoice, and what is the price as per authorized list. Is it right? The authorized list. First thing. Now, more significant, what is the accuracy? People will give discounts. Is that people will, again, discounts has to be authorized. Is it right? Discount we have covered somewhere. A clerk will issue discount. A clerk will decide what is the amount of discounts. Is it? A clerk will decide what is the amount of discount. No, discounts has to be decided and approved by whom? Discounts has to be decided and approved by the sales director or at the senior most position. Is it right? Test whether discounts has been properly applied by recalculating them to a sample of invoices. And now it's very simple, is it right? You have VAT, is it right? Some goods doesn't have VAT, some goods will have VAT, is it right? Some sales have no VAT, is it right? Some sales have no VAT, some sales have VAT, is it right? Now what is the process? You should know whether VAT has been calculated rightly or not. Is it right? You have to test the correct calculation of tax on sample of invoices. In our case, we are talking in terms of VAT. Is that you have lot of items which doesn't have any VAT. Is that we have some items which are having a VAT of 5%. Is it right? You have some, now you have the VAT. Is it right? You have the VAT. You have municipal tax. 5% municipal tax will be there. Is that 3% tourism tax will be there. Is that 3% tourism tax will be there. Now whenever there is sales, definitely we have to make sure that this tax has been done as per the requirements or not. Is it? That is what we are talking in terms of accuracy. For a sample of sales transactions, last, is it right? This is the ending stages. For a sample of sales transactions, you have to make sure that it has been recorded in the ledger, trial balance. Is it right? Ledger means what? See, whatever the ledger balances will be carried to the trial balance. Fine. Vouch means you should compare. Is it right? Vouch the sales back to customer orders and dispatch documents. Is it whether we see what happens whenever you are talking in terms of sales? Is it right? Sales in terms of what? In terms of we are saying ledger. Ledger is nothing but trial balance. Is it right? Now what we have to do? We have to invoice back whether this has been done as per the customer orders. You have to go back. One side you are going forward, another side you are going. And what? Customer orders. Again, customer orders, what you are doing? Whether it has been dispatched. Is it right? Dispatch documentation. The moment you are documentation means whether we got acknowledgement. Is it? Whether we got acknowledgement from whom? We have got the acknowledgement from the customer. We get the acknowledgement from the customer, automatically it will be treated as sales. It will be treated as receivables, and subsequently we are going to receive the cash. If there is no confirmation, is it right? If there is no confirmation from the client, definitely there is a disagreement. Is it? If there is no confirmation from the client, it means there is a disagreement. Again, for those disagreements, we have to look into. When we are talking about the very important confirmation, you have to get in writing. Is that return confirmation is very important, or no oral confirmation. Understand point? If you have to receivables confirmations from the third party, because it is a evidence about the amounts which has been outstanding. Is that what is the amount of outstanding? Receivables and payables should match. It is therefore an excellent source of evidence in terms of what? In terms that is sufficient and that is appropriate. If you are getting a return confirmation, is right? If you are getting a return confirmation, there will not be any disagreements. Okay, any disagreements? Yes, it is a sufficient and it is appropriate. It provides what is the return confirmation? It provides about the existence. First, you have the rights and obligations. It talks about what? Existence, rights and obligation. They say it doesn't talk about what? It doesn't talk about valuation. Because what will happen? Assume you are having receivables. It talks only about receivables. Fine. It will not talk anything about provisions. Provisions comes second stage. Is it right? Provision comes second stage. It doesn't talk about, see, receivables are going to be 50,000. Is it right? When you are saying confirmation, the confirmation will be given for how much? The confirmation will be given for 50,000. Subsequently, is that okay? They will ask some reduction, they will ask some negotiation. You will say that yes, we are reducing how much? We are reducing 5,000. Is it right? This happens the next stage, not in the first case. Is it right? This happens in the next. What it says, what is the rights and obligation? Rights and obligation talks about the amount, evidence. Okay, talks about the evidence. Yes, it's you are agreeing. One side you are agreeing with receivables, is it right? One side you are agreeing with payables. That's all. You are agreeing to the amount. You are not agreeing that I will pay. Understand? I will pay. What you are receiving, that is the next stage as such. Is it? External confirmation is our audit evidence obtained as a direct return response to the auditor from the third party. Where you see, this is at any point of time you will be tested on this in the examination. Any point of time it will be tested. External confirmation. It is there with respect to inventory. It is there with respect to non-current assets. It is there with respect to receivables. It is there with respect to the cash and bank. Okay, cash and bank. Is that to the auditor from the third party or by electronic or any other medium. Okay, by you have to get some written confirmation. Fine. Confirmation is essentially an act of the client who can alone authorize that third parties to divulge information. That means we are getting the confirmation from the client. There will be no second thought. Okay, there will be no second thought as such. There are two methods. One is positive confirmation and one is negative confirmation. Is it right? One is for simple points. The moment you will revise it, you will understand it. Is it right? What is the positive confirmation and what should the auditor do if the client does not give permission for receivables? Is that sometimes it happens? Is that some clients say that will not give what the auditor will give, what the auditor will do? That's very important. Here we are talking about positive and negative in the next stage. Before that, what auditors will do? It's a very critical case. What we have learned till now, what you have got the message from this module, that you should not give up. As an auditor, you have to search multiple source of information, multiple source of getting the information for a evidence. If this is not there, what is the alternative? Is it not? What the auditor will do if you are not getting the information? First, the auditor will inquire with the management. Inquire about management refusal to give permission. See what happens if management is not giving you permission. Is it right? Is management is not giving you permission to do anything? Then you have to ask the management why you are not permitted, because the auditor has the right to get the information from the third party with the knowledge of the management. Understand? This is the basic concept. With the knowledge of the management, you can get the third party. And third party will directly address this to the auditor. Got my point? But the information should be known to the management. First, you have to inquire about management refusal. Second, seek evidence about the validity and reasonable reasons of refusal. Okay, fine. In some cases, management says no. Then you ask what is the reasons. Is it right? You have to ask what is the reason. Next, third one, what are the implications? What will happen? Definitely it will happen on the audit report. Is it right? It is not so easy. It happens on the audit report. The auditor cannot sign. Is that? They will give you a limited assurance. Is it right? Provide alternative substantive procedures. Is there any other options? You have to write this much. You should not, you're going to say that. First, what you have to do? You have to inquire with the management why the permission is not given. You should know what is the validity, the reasons for not giving permission. You have to say what are the implications. And the fourth one is what are the alternatives. The fifth one, it says that communicate. You have to make sure that it's not a charge with the governance, basically board of directors. And when you do the things, it will have implications on the audit report. Understand point? See, you are an auditor. You are going to the client place. Client is not giving permission, and definitely you will not take that into account. You will give a conditional statement. If the reasons are unreasonable and cannot be sufficient, appropriate evidence from the other sources. It will have implications, is right? It will have implication that you are not getting a reasonable and sufficient information. Is that? You are not getting, it will have implication. What are the implications? We will cover this. We are not going to cover at this stage. Is it right? Now, what it says, there will be two types of confirmation. This will be there in the MCQ. Very simple, not difficult at all. A positive confirmation is the client will respond. Is that? A positive confirmation is a confirming party response directly to the auditor, indicating whether they agreed or disagreed. Okay? They say that yes, fine. They agree or they disagree. They will directly with the information in the request or provide the requested information. Is that? There is a positive confirmation. They will respond. Okay? They will respond whether they agreed or disagreed. What is the negative confirmation? They will respond. Is it right? They will respond directly only if they disagree. Got it? What is the positive confirmation? They respond directly to the auditor whether they agree or disagree with the information. Fine. Now, what is the negative confirmation? Negative confirmation is if I am not agreeing with that, I respond directly to the auditor when I am disagreeing with the amount. I am with the amount. What it says, the positive method is generally preferable. Means it says that whether you agree or disagree, okay, whether a client will agree or disagree, it has to respond. Is that? They have to respond with the information. They should not respond when they disagree. Okay? This is the preferable. Very, very important. At least they will give it for 2 marks. 2 marks only, 1 mark each. A positive confirmation, confirming party respond directly to the auditor whether agree or disagree. Is that? Negative confirmation part is one which will be respond. Confirming part respond directly to the auditor. Fine. If they decide. The negative method is only used if all of the following apply. Is that? The risk of material statement has been low. What is the negative? Negative statement is nothing but they will respond when they disagree. Is that? The negative method says that the auditor has obtained sufficient appropriate evidence, is it right? Or the operating effectiveness of the relative controls. Is that you are getting sufficient what are the relative controls? Relative controls is nothing but in terms of the confirmation, is that in terms of the bank receipts, in terms of the sales invoices, is it right? Relevant controls with respect to what? It talks about what? It talks about the related documentation. What does that mean? See, there will be disagreements, okay? There will be disagreements. There's not, they will never, you cannot expect that there will be complete agreements. But the population consists of a large number of small homogeneous account balances. Is that there will be disagreement. It's not like that there will be agreements. Never happens. Is right? There will be disagreements. But what happens? These agreements are relatively small. Is that these agreements are relatively. The very low exception rate is expected. Means you will have negative confirmation, but it will be very big. Because why it is less? The reason is we are taking so many precautions. Is that this is the last stage when you are talking about the auditor is not aware of the circumstances or conditions which cause customers to disregard. Is that means what happens? This is the part and parcel of activity. Whenever you do the sales, definitely there will be provision for losses. No one in the world says that I am doing a credit sales and I am recovering the 100% of my credit sales. It never happens. Never happens. Okay? When you are doing it on the credit basis, definitely there will be some losses. But the loss, how much we say, how much we have calculated? We calculated 2%, we calculate 3%. It's a very huge number, is it right? In most of the cases, it will be what? It will be less than 1%. Now, see, now the things are very stringent, very tough. When you are dealing with the credit, definitely it's not possible to default. If any customer is going to default it, he will have a very high repercussions. Is that the actions are very severe. Even in simple case, check cannot be bounced. Is that check when you are issuing the check cannot be bounced throughout the world. That is one of the stringent conditions that has been laid. Now, whenever we are receiving the confirmation, is it right? It has normally prepared by the client letterhead. Okay, client's letterhead. That's very simple. Is that it has not been mentioned here? Is that letterhead, and it has been signed by the client. Therefore, the auditor must maintain strict control on this process. Is that in order to mitigate any risk of fraudulence, there should not be any manipulation. A copy of the statement is included in the letter. What is the copy of the statement? Is copy of the account statement. Account statement, when we are saying it is account statement from the client point of view, it is the payables account. Individual, is that individual payables account has to be attached. Customer sent replies directly to the auditor. Is that prepaid envelope? Undelivered item should be returned to the auditor's office, not to the, if anything is there, it has to go to the auditors, but not to the client's office. They gave you a sample of that, is it right? How does the auditor select a sample of receivables confirmation? What are the various points that has to be taken into consideration? From which type of customers they want to receive confirmation? The customers who are old and who are not paid, the customers who have accounts written off during the period under review, the accounts with the credit balances. From these people you have to get return confirmation. Understand point? Account settled by round sum payments. Is it right? See, rounding off is a big issue. Is it right? Rounding off is a big issue. If you If you accumulate, is it right? If you accumulate the rounding off, it will be a big amount as such. Is that? From those also we have to get return confirmation. If there are any nil balances, it is most important. These are the simple points. Is it right? These are accounts with nil balances, you have to get confirmation. Account which has been paid by the date of examination, is it? Account which has been paid by the date of examination, at the date on which it has been examined, last moment we have to get the return confirmation. Okay, again I'm saying any old or unpaid accounts, you have to get return confirmation. Is it right? Accounts written off, you have to get confirmation. Account with credit balances, accounts settled with rounds payments, accounts with nil balances. Is it right? This is very, very important and very, very easy. You can score marks. That's also. Is it right? Next, accounts which have been paid by the examiners. Why should the auditor do if reply is? What should the auditor do if reply is non-received? Is it right? A non-response is a failure of a confirming party to respond or fully respond to a positive confirmation. What is the positive confirmation? You have to respond to the auditors whether you agree or you don't disagree. Is it right? That's what it is. If you are not responding, it means it is a failure. Is it? Is a failure of confirmation request undelivered. The auditor can send additional confirmation, another request. Is it right? If the reply has not been received, you can contact them personally to get the request. The auditor may have to do alternative audit working plan. You should not give up. Is the first you have to give additional another request you have to give. You have to request second again, and you can contact them on any means of communication, and you have to make sure that to gain the evidence about the balances, because receivables, because in the beginning also we have said receivables are material. Fine. What happens if the auditor will disagree? Is it right? When there is a disagreement? Is it right? When there is a disagreement about the client, an exception is a response to show that there is a difference of information requested to be confirmed. Whatever this difference is, right, in the records and provided by the party. Definitely, if there is any difference, we have to make. Is it an exception? Is it one in a all things, or it is happening with all the clients? The auditors will need to do further work. Is it where responses give some exception? Means you have to do additional procedures. Is it right? What are the exceptions? There may be disagreement with balances. You have cut-off issues. Is it right? You have dates. Is it right? December to January or January to December. Money is received posted to the wrong account. Is it right? Sometimes what will happen? It will be in a cash in transit. That is the reason what we will do. We will do what? We do bank reconciliation. Is it? We do bank reconciliation. Netting of balances by customers and suppliers. Is that what will happen? Receivables. Is it right? Receivables and payables. Is it right? One side you are receiving, one side you are paying. Means you are purchasing as well as you are selling. Is it right? What you will do? You will take the net amount. Is it right? You will do the net. This net amount is called as netting. Is it? This net means what you will do? I am selling and somebody is buying. Is it right? I will pay only the difference, or he will receive only the difference. Either he will pay the difference or I will pay the difference. As simple as that. Is it right? Maybe because of that there will be some disagreement. You have a fraud. Is it right? In terms of stealing money, incorrect postings, all the things, there will be some exceptions. Is it? What they have mentioned, you have obtained the following results from 3 receivables selected for external confirmation. Is that you have the balances per ledger 25. Is that balances are circularized. Response is how much? 25. Reasons is there is a cash in transit. Is it right? There is a cash of 5,000. Means you have issued the check. Check has not been deposited. Check has not been received. Is that another company? 55,000 is the balance. Confirmation you received for 45,000. They say the reasons is good not received at the year end. Is it right? Goods we have ordered the goods, but by the time that's the reason, is it? If you receive the goods, what will happen? See the thing. When goods received note is there, goods received note will be given to what? Goods received note will given to the purchases, and goods received note will be given to the accounts department. Is that right? You have given a purchase invoice. Is it right? You have given a purchase invoice. They have sent the goods. They have dispatched the goods. Good dispatch note is there, but goods received note we are receiving. We have placed the order in the month of November. The product will receive in the month of January. Is it right? In the month of January. Definitely, unless until you don't receive the goods received note, you will not send it to the purchase to match. Is it right? Whether we have to match the purchase with the purchase invoice. Once you are matching the purchase invoice, then only we give to the accounts department. Then account department will send it to the bank. Payments. Is it right? That is one of the reasons. 58,000 is there. Is it right? 68. Is it right? How much is there? 57. Disputed invoice. Disputed invoice in terms of they are not agreeing with the quantity or they are not agreeing with the quality. Is it? Not agreeing with the quantity or with quality. Is it? Definitely, if that is the case, I will not detail the test you will perform if the following. What you will do? They will give a question like this. We will do the question like this in the next phase whenever you are going to revise the question papers. Is that? They will talk, we have to write for each company separately. What the reason they say? They say that cash in transit. Is it that? Cash in transit means cash in transit is nothing but should be traced to the cash receipts book and would expect to be received within a few days of the year end. Definitely. Is it? They have sent it, we have not received it. They have sent it, but we have not collected it. Is it? They have sent it, but we have not posted it. Is it right? Not deposited. There will be so many things will be there. I would also try trace out the cash to the bank paying slip. Is that whether we have deposited in the bank, and once we have deposited in the bank, it has to be stamped by the bank. Then only we can agree that it is a cash in transit. Second one, the goods in transit. Is that once the first one is cash in transit should be traced to what? Goods delivery note. That's what I have mentioned here. Is that we are talking about what? We are talking about the goods delivery note. We are talking in terms of what? Goods received note. Goods delivery note. Again, I am saying goods delivery note will be related to what? Related to sales. Goods received note is related to what? It is related to purchases. Very important. Vocabulary. Understand point? This is the vocabulary. This is the language of auditing. You have to get that flavor. Very simple. You have to get the flavor of the vocabulary. 90% your task will be easy. Is that you have to take the vocabulary. That's very, very important for us. Is it right? Goods should be traced to goods delivery note prior to the year end. If inventory record exists, the dispatch. If inventory department say dispatch, you have to trace out and confirm that it has been sent before the year end. Either you have sent, they are receiving or not receiving is another case. Is it right? When they will receive, that's fine. But You have to make sure that if it, that is the reason. In most of the cases, 30th of December, 31st of December, the transactions will be halted. The transactions will be halted because there should not be any confusion with respect to payment and receipts. Is the second one. Third one, the reason of dispute. When there is a dispute, we have said what is the dispute? Dispute with respect to quantity, dispute with respect to quality. That this one should obtain from the correspondence between the client and the to whom we have sold it. Is it right? Credit notes post year end should be scrutinized whether the credit was given for the disputed goods. Now you understand importance of credit note. If you have given a credit note, is it right? You have to scrutinize, and we have to say that whether any disputed goods, is it right? Sales returns, some goods has been delivered not up to the quality, some goods has been delivered but they have damaged. Is it right? Definitely what will happen? All these terms and conditions will apply. Cash receipts should be reviewed post year end. Is it right? And we have to determine that the client has been paid in full balance. Is it? Definitely, is there any disputes are there with respect to payments and receipts? If the amount is outstanding on the date, discuss when we are going to recover. Is it right? With whom we have to think about the credit. The first time you are coming across this word, credit controller. Is it right? In the examination, we will do this. Is it right? In any paper we are going to revise it this week, we will do a question like this. In the examination, you have to write like this. They say that sales or receivables are tested together. Sales are likely to be material. Completeness and accuracy are the key for financial statement assertions. Is it? Analytic. These are the things what we have to be specific. Analytical review is key substantive procedure. Is it right? You have to analyze what is the sales, percentage of sales to provisions, percentage of sales to bad debts. Is it right? Percentage of sales to sales returns. Is it right? You have to compare level of sales month by month. Is it right? And we have done previous year. Is it? Review sales, review effect of sales changes on the in terms of quantity sold, prices and products. Is it right? You have to review how much goods has been returned. Is it right? What are the discounts we have given? These are very, very specific. Is it right? Efficiency of labor expressed in terms of sales or profit per employee. We don't do that much. Is it? We have not done. I have not come across anything on this. Is it right? Fine, no problem. Analyze changes in the what is the gross profit this year. What is the gross? See what we have to do. Make it sure. We have to calculate with the previous year. You have to write this. You should not calculate. You have to write this. You have to calculate with the previous year, and you have to compare with the industry standards. Current year, you have to compare the current year with the previous year and current year with the industry standards. That's very important. You are not supposed to calculate. Very clear. You have to write this. When asked about substantive procedures to test receivable, make sure that your answer does not just talk about the confirmation. Other test has been done, such as review after date and before date and analytical procedures. Is that the receivables confirmation does not provide evidence. We have done this. They don't talk about evidence. They only provide about the rights. Yeah, they don't talk about the valuation. Is it? Just very quickly we will finish it off. Okay, very quickly. Is it examination question? It makes sense. Is it? Rose Leisure operates. This is the one now we have to do. No. Yeah. Is it? 1 minute. one or two questions. Is that within the time frame we will do and we will stop. Nothing will happen. At least we got the concept how we are doing. Is that tourist leisure operates? First we have to make sure that how many marks are there. 6 marks. Describe substantive procedures you would perform to obtain sufficient and appropriate evidence with respect to the trade receivables. Is that right? Tourists operate a chain of health and fitness clubs. Year end 31st. You are an audit manager and the year end audit is to commence shortly. The following matter has been brought to your attention. Fine. From here it will start. Tourist trade receivables have historically been low as most members pay monthly in advance. Then what you have to do? You have to take into consideration prepayments. Prepayments of this year, prepayments with the prior year. Is it right? This is the first point. Is it? However, during the year, number of companies have taken up group membership at tourists and receivable balance is now material. When they have taken the memberships, again you have to see how much they have done in the current year and how much they have done in the previous year. The audit senior has undertaken receive circularization, means confirmation, okay, for the balances of the year end. However, there are a number of who have not responded. A number of people responded with differences. Is it right? They have responded but they disagreed. Is it right? They have responded but they have disagreed. This is called as positive confirmation. Is that? This is called as a positive confirmation. Fine. 1, 2, 3, 1. This is 2. Is it? This is 3. Is it right? And fine. Okay. What it says? Send see if they are not responding, what? If they are not responding, send an additional confirmation. Is that? Now you can understand. Importance is your theoretical PowerPoints. Is it right? If you are clear there, you are clear here. Send additional confirmation if the reply of non-responses has been received. Fine. If where the customer does not respond to this follow-up, what they have mentioned, make a phone call. Is it? And ask them to give some written response. If the response is still not received, is it right? If the response is still not received, is it right? If the reply is still not received, review what we have to do. We have to do our own activity. Is it right? We receive cash receipts after the cash receipts and recoverability at the year-end balances. Few exceptions. Review what we have to do if there are any mispostings. Is it right? If we have posted in wrongly. Is it right? If we posted wrong mispostings, we have to review it. Is it right? Maybe there will be mistake from our side. For a balances that are disputed, determine whether they are related to the timing or possible errors. If there is any balances are there, fine. Is it? We have to make it sure that whether it is related to timing, it is related to the deposits, it is related to the encashment. Is it? What is the reason of dispute? Is it right? Agreed timing, that is in a cash in transit. Is it? So that what is the cash received, cash receipts, and in the cash book as such. And most importantly, discuss. Is that this you have to see in one of the cases what we have done. We have done reconciliation. What I told you, reconciliation should come in the end. Is it right? Here also, any disputes are there. First, you have to make the basic additional activity to get the evidence. Once you are getting the additional activity to get the evidence, what it says that you have to discuss with whom? You have to discuss with the finance director whether there are any write downs are required. Is that? This is where we are making a point that things should be in coordination with the receivables. Is that first what you have to do? Send additional confirmation. Second, we have to call by you have to contact personally. If you are not getting both the things, then you have to take the cash receipts and you have to compare with the year-end balances. For some exceptions, you have to make whether it has been wrongly posted. You have to, any disputed items, what are the possible errors? Is there anything in cash in transit? And last but not the least, we have to discuss with the director. Is that what they said? A small one, is it right? Rose Leisure Club operates a chain of health and fitness clubs. 31st December, you are a audit manager and the year-end audit is due commensally. Year-end audit due commensally means what? It is a draft financial statements. Is it right? It is a draft. Don't ever write financial statements. Draft financial statements. I will tell you where to write financial statements, where you have to write draft financial statements. Okay. Those trade receivables have historically been low as most of the members pay monthly in advance. However, during a number of companies have taken up group membership at Rose and hence the receivable balance is now material. We are not talking about individuals, is it right? We are not talking about individuals. Individuals fine, the materiality will be low. Is it right? The materiality will be low. If there is a group membership, is it right? If there is group membership, what will happen? The materiality will be high. Definitely you will get huge amount at once. Is it right? The audit senior has undertaken circularization. Circularization is nothing but confirmation for the balances at the year end. However, there are number of who have not responded. Now you got a idea. Got my point? You got an idea that when the receivables are there, receivables talks about aged receivables. Receivables talks about non-confirmation. Receivables talks about the number of days provisions. Is that receivables talks about the losses. We never ever discuss receivables from the positive aspect. We discuss the receivables from the non-recovery aspect only. Is it right? There are number of who have not responded and number of responses with differences. Means it is a positive. Is it right? It is a positive. Describe the substantive procedures. Fine. 5 marks. 5 marks, 5 points. Okay. The question is about what audit work to do if your receivables confirmation has resulted in exemptions and non-response. What they are saying? Confirmation is already done. So do not write down the process of carrying out the confirmation. Is that confirmation is already done? Is that what they said? They said very clearly. Is that they said very clearly that the audit senior has undertaken a receivable circulation for the balances in the year end. Is that means you should not do anything, you should not write it. Is that is the way you have to be. There are 5 marks available, for 1 mark for each procedure, or the comments noted that it has been poorly defined. Therefore, you need to both to read the requirement carefully and answer your things. Is it? For non-responses, we are not talking about we have to send the responses. For the non-responses, we have to send another confirmation. For the non-responses, we have to call by telephone. If there is no still response, then we have to take the cash receipts and we have to what are the cash receipts at the year end. The answer for the previous one, the answer for the current one is both are same almost. You do any number of questions, The presentation will be the same. Exceptions, what you have to do? What are the exceptions? Exceptions is nothing but we are talking in terms of wrong postings. Is it? We are talking in terms of wrong posting. We are talking in terms of what? We are talking in terms of the cutoff, carry on test, whether customers paid shortly before the year end. Just before the year end, maybe they will pay. Is it that they are paid, but we are not recorded? You have to say review after date. Is that we have received on 2nd of January. You have, but it is related to the December. You have to take that consideration. Is it right? Otherwise, what will happen? Provisions will increase. Is it right? Review after date cash receipts to confirm that amounts outstanding had been year end has been settled. You have to see what is the cutoff, whether customers have paid just before time. Receivable ledger for any wrong postings. Any disputed transactions are there, you have to what? You have to discuss with the management and assess the materiality of any misstatement. Means what is the value of receivables. But don't write value, you have to write materiality. Okay? For you are under don't write value, you have to write what? You have to write materiality. Are you clear about this?